The labor market has held up stronger than expected despite economic challenges. However, there are indications that the labor market may be starting to loosen. Firms added 236,000 positions in March, the smallest gain since December of 2020, and a notable slowdown from the prior 2 months. March labor force participation rate moved higher for the fourth consecutive month as more than 1 million people entered or re-entered the labor market, with more than half of those finding jobs during the month. The shortage of workers during the pandemic and beyond has been a missing piece in the return to normalcy, with many older workers choosing to retire early during the pandemic. Challenges in returning to pre-pandemic labor force levels have been front and center. However, prime age workers, or those between ages of 25 and 54, have been driving the increase in labor force participation. That cohort has fully returned to its pre-pandemic rate and should alleviate labor supply pressures that can lead to higher wages. Average hourly earnings were marginally higher by 0.3% in March, but that represented a weaker annual gain of 4.2% from February's annual gain, and that has been on a general downward trend since the middle of last year. Job openings fell to 9.9 million at the end of February from 10.6 million in the prior month. Firms are rethinking their needs, and job listings have been pulled down as hiring needs slow. The biggest decline occurred in the professional and business services sector, where job openings fell by 278,000, or a 13.3% decline. This trend is indicative of the slowdown in the labor market. Recent revisions to the data on initial claims filed for unemployment benefits showed that job separations have grown faster over the past few months than earlier reported. The Fed Reserve is closely watching the labor market as it has feared a fight for new hires would push up wages and prevent inflation from moderating. Any emergent evidence of a slowing labor market will certainly be good news for the Fed and should buoy equity markets on the prospect of an end to rate hikes. Now, if you're in need of an experienced commercial real estate broker, I can be reached at 281-222-0433. Thanks for your time and have a good one.